Hi, I'm Anup, and I welcome you all to Blue Saffron, the podcast program of corporateshitak.com, sponsored by Jani Plastics. And you are about to receive knowledge on Indian and Australian GST, goods and service tax. Yeah, you got it right, mate. Let's get started, shall we? It's 30th of September 2021. In this podcast, we are going to look at types of GSTs and GSTRs. Now, what is that? It's nothing but the return that people of India file every month, every quarter, every year, depending on their nature of the business and the transactions. Well, by the way, just a small note, folks. Me and my Sydney-based associate Satish are coming up with the book on this, and the effort has already begun. Yes. So I recommend not to try and make notes of the podcast, as you'll get everything and much more in the form of an ebook. Alrighty, no worries. Speaking of GST types, which are essentially four types: SGST, CGST, IGST, and UGST. The first one, state GST, levied by the state government. This tax is levied by the state government on intrastate goods and service transactions. For example, my company, Jani Plastics, manufactures in Mumbai. Now, Mumbai happens to be in Maharashtra state. So the government of Maharashtra will levy the tax on the items sold within MAH, that is Maharashtra. Central GST, the next one. This tax is levied by the central government on, once again, the intrastate goods and service transactions. So if I'm selling the goods or services within the state, the tax is collected by the central government equally. Next is IGST, the integrated GST. This is the real GST dream to be achieved ultimately, my friends. Now, this tax is levied by the central government of India on interstate goods and service transactions, which is applicable on imports and exports as well. So let's say Jani Plastics caters to all over India. So if goods are sold in Tamil Nadu or Karnataka or Gujarat, in other state, then the tax will be collected by the central authority. Now, the question might arise in your mind that why there's a difference, why such complication? Now, you see, my friends, when the GST was rolled out in 2017, there was a gigantic effort being carried out by the central government of India, the Modi administration. You see, the changes are often seen as with a skeptical mind, and nobody wants to give up their powers. Now, state governments had the power to levy the tax on the people. So the central government came up with the idea, let's share the taxes. So that's why we have this. But ultimately, it's going to be, hopefully, the integrated GST like. Next, Union Territory Goods and Service Tax. Now, this one is Union Territory specific. You remember, India has states as well as Union Territories. There are various Union Territories like Lakshadweep, Andaman and Nicobar Islands, and especially after abrogation of Article 370 on 31st of October 2019, just a couple of years back, not so long ago, there has been addition of two new union territories, yes, namely Ladakh and Jammu and Kashmir, whose administration comes in directly under the central government of the Republic of India. All right, so that's why we have these four types. Okay, return types now. GSTR 1, 2A, 2B, 2, 3, 3B, 4, 5, 5A, and then there's 6 through 9, then 9A, 9C, 10, and 11. There are 17 different types of returns. So first thing first, GSTR 1, very important one. It has the furnishing of outward invoices, credit and debit notes. And this GSTR 1 is filed every month on 11th of every month. Okay. GSTR 2A is a view only, auto populated from GSTR 1. See, when you file GSTR 1, the 2A and 2B get populated automatically and they are view only. So then what's the difference? The 2A is dynamic. In case of invoices are missing, the buyer and the supplier can communicate with each other, all right, and it's constantly updated. It's got dynamic view of the input tax credit. What is input tax credit? Most likely we will see that in the forthcoming podcasts. GSTR 2. Now folks, this 2 was like to be or not to be, and it's in suspension since September 2017, thank God. It is auto-populated and yet was editable. But now it is in suspension, so don't worry about it, right? 3, GSTR 3. Once again, it's auto-populated from GSTR 1. As soon as you file your GSTR 1, this 2A, 2B, 3, they get auto-populated. And that too, my dear friend, is suspended. Thank God. Coming to the very important type, GSTR 3B, the very important one. It's the self-declaration filed on 20th, on or before 20th of every month. It has the summary of the taxes paid, tax liabilities, the input tax credit claimed, the outward supplies, that is invoices. What is outward supply? When you make a sale, that's the outward supply, and the sales invoice represents your outward supply. All right. 4 is annual return. It's filed by the person opted for the composition scheme. Now I can't promise, but I will try to cover in forthcoming podcasts. All right. So GSTR 4 is filed on 30th of April every year. It's an annual return, remember. GSTR 5 filed by the non-resident foreign taxpayers who carry out businesses transactions in India, filed on or before 20th of every month. GSTR 5A is just a summary of the outward taxable supplies by OIDAR, that's Online Information and Database Access to Retrieval Services. Not sure if it made any sense to you, not to me though. Anyway, moving to the next one, GSTR 6. That is filed by the Input Service Distributor. There's a special section. We'll look at the Input Service Distributor in forthcoming podcasts. Now this GSTR 6 is filed on 13th of every month. It's a monthly return. 7, filed by the person who is deducting the taxes at source. It has essentially the TDS liabilities, TDS paid, and refund if claimed any, and is filed on or before 10th of every month. 8, GSTR 8 is filed by the operator who do TCS, tax collection at source, on their e-commerce platforms. You know TDS, TCS? The GSTR 7 is about TDS. Similarly, GSTR 8 is about TCS, and that also is filed on or before 10th of every month. GSTR 9, its annual return, 31st December of every year. 9A, that's currently suspended, so don't worry about it. It's just a consolidation of all the quarterly returns. They are consolidated into something called as GSTR 9A. 9C, it's a reconciliation statement for the businesses having turnovers more than rupees 2 crore, that's 20 million per annum. Has to be CA or cost and management accountant certified, the audits and all that. And this has to be filed on or before 31st December of every year. It's annual return. GSTR 10, it's a one-off final return to be filed within 3 months of your GST cancellation. Yes, when you are opting for the GST cancellation, so the cancellation order is released or your GST is cancelled. So whichever is earlier, within 3 months time, you have to file this return. It's a one-off return. It's the ultimate one. Now there's one special kind of GSTR 11. That's for special people, very, very special people. The people who are holding the unique identity number. What kind of people are they? Maybe they are diplomatic, on diplomatic mission, or they are connected to the embassies. Now the embassies, as we all know, are not liable to tax in India. So the people holding this unique identity number and who are on the diplomatic missions, they file it to get the refund for the goods and services purchased in India. All right, so that pretty much wraps up with the types of GSTs and returns. So my dear listeners, I hope you enjoyed the audio. I also hope there was some takeaway for you. Signing off now. We'll come up with more interesting episodes. Till then, take good care of yourselves. Keep liking your one and only Blue Saffron. Cheers. Bye-bye.